Hello, everybody. My name is Darryl Glass, and I am the Executive Vice President and Lead Realtor here at Advent Properties. Today, I'm excited to announce that we are starting a new video series to provide that service beyond expectations we pride ourselves about. Today's topic is 1031 exchange process. Some of you may have heard about this, but let me give you a little bit more information about this process. A 1031 exchange process is where you sell a current investment property and you reinvest the funds from that property into a replacement property. This helps you so you can defer your taxes and not pay the capital gains on selling that current investment property. There are 4 types of exchanges that you can do. The first type is called a simultaneous exchange. This is not very common, but can be done. With this type of exchange, what happens is your current property and the property you're buying close escrow on the same exact day. Now that's a little bit challenging to do, so there is a second type of property exchange that you can do. This is called the delayed exchange, and this is by far the most common way that 1031 exchanges are done. The way this works is you sell your current property, you put the proceeds of that property into a third-party intermediary company that specifically handles 1031 exchanges. You then have 45 days to identify a replacement property and 180 days to close on that replacement property. The third type of exchange is called a reverse exchange. This is sometimes referred to as a forward exchange. Now, this is a little bit more challenging and does require some skill and some financial capital. To do this, you must buy the new property all cash. You then identify the property that you want to sell, and you have 45 days to do that, and then you have to close on the sale of that property within 180 days. The fourth and final way to do this type of exchange is through a construction or improvement exchange. And this is where you can fix up the property that you're buying with the proceeds from the sale of your current investment property. This again is not very common, but can be beneficial if you buy a fixer-upper in order to increase the property value of that new property that you're buying. Now, there's a couple rules that must be followed when you do a 1031 exchange. The first rule is you have to use a 1031 intermediary company. You cannot have the funds go into any of your accounts. If the funds go into your accounts, you are automatically ineligible for a 1031 exchange and will have to pay the capital gains taxes on it. The second way to do this is you have to purchase like-kind property, meaning within real estate, your investment property has to purchase another investment real estate property. Now, that investment can be a single-family home, multifamily home, or commercial, as long as they are not for personal use and truly are an investment type property. The next rule is the replacement property must be greater to or equal to the replacement cost, meaning the property that you're selling has to at least equal the amount for when you're purchasing a new property. The third rule for this type of exchange is this must be done under the same taxpayer. The tax return and the name appearing on title of the property for the investment property that you sold must be exactly the same as the title for the new property that you're buying. This means if you have business partners and you want to do a 1031 exchange, all of the same business partners have to be on that new exchange. Now, probably the 2 most important rules are the timeline for these type of exchanges. The first and most important one is you have 45 days after the sale of your investment property to identify a replacement property. Now, the 45 days mean you have to identify up to 3 potential properties of like kind. An exception to this rule is known as the 200% rule. In this situation, you can identify 4 or more properties as long as the value of those combined does not exceed 200% of the value of the property sold. And the final rule is the sale of the property that you're reinvesting into must be closed within 180 days. If you get to day 181 or beyond, This is no longer a 1031 exchange, and you will have to pay taxes on the proceeds from the initial investment property that you sold. So that's just a brief outline of the 1031 exchange process. If you have more questions or want to discuss this further, I'd love to talk with you. You can email me at dglass@adventpropertiesinc.com, or you can call me at 510-500-7531. I look forward to talking to you soon, and thank you.